So we are about to go live. Okay. Hi everyone. Good afternoon. Thank you for joining this BeGreen Masterclass on financial planning and reporting. You're all welcome. With me here, I have Ms. Omowumi Adenuga Taiwo. She is the head of operations at OpenPass. She's a business transformation consultant with a career spanning Accenture and Deloitte. She has also spent the last 7 to 8 years shaping business strategies, leading and executing enterprise transformation initiative for clients in the FMCG, healthcare, financial services, and telecommunications, as well as public service and development sectors. Thank you for joining us, Omomi. On the call, we also have Foucault Rollins, who will be translating for our French participants. Thank you very much. Over to you, Omomi. Please, you can introduce yourself and then we can start. Yeah, thank you.
Got it. Thank you very much, Chimezie, and good afternoon once again. All right, we will just go ahead and get started. Today's session is focused on developing financial projections for your business. And this information and this knowledge is what will be relevant in providing and documenting, filling the financial projection templates that have been provided for this program. So in the interest of time, we're going to move very quickly in this session, and periodically I will hand over to Foucault to do the French translations. So the focus of this session is the financial projections templates that has been distributed to all entrepreneurs and how to fill it. But before we go into that template, where I will switch my screen to Excel and then talk through the template that has been provided, I just wanted to spend a few minutes just introducing the concept of financial planning in general before we go into the Excel templates. So, and with that, I'm going to get started. So I want to spend, whenever I have sessions like this, I like to spend some time just talking about the relevance of keeping financial records, and it's essentially financial records or financial projections that go into the financial templates that we're going to fill. So why is this important? It's important to keep track as entrepreneurs, to keep track of our sales, cash and credit sales, to keep track of loans, stock levels, and keep track of, in general, how money is spent by the different stakeholders in the business. So as business owners, this is always critical. It's very easy to start to spend money, either to bring in, it's very easy to start to manage money in the business, either through inflows or outflows. And then after a while, it becomes overwhelming and you start to lose track of when this inflow came in or when this outflow went out. And once that happens, your business is at risk. That is why it's important to keep track of your financials, how money is coming into your business, how money is going out of your business, what you are using money for in your business. All of this is very important. And this is what is essentially the process of record keeping in the business. And this is a very vital process in your business activities as entrepreneurs. Another key reason why this is important is for information and for financial planning. So by keeping historical records, you are able to plan for the future. As you keep track of how you spend in your business or how you earn in your business, you're able to estimate whether you're meeting your financial targets for your business. For instance, if you set up your business with the goal and the ambition to hit a particular amount of revenue, perhaps $1 million in revenue within your next 3 years, keeping your financial records helps you know whether you're on track or you're not on track. Another reason to keep financial records is just to know how much money you have received, how much you have spent, and how much is leaving your business, how you spent it. Also know how you're making profits or not, and to take corrective actions. And another reason is to know whether you have enough money to meet your short-term obligations. So before I move to the next slide, I'm just going to hand over to Foko to do the translations for this section.
Thank you, Omoyomi. Bonjour tout le monde et une fois de plus, bienvenue pour cette session où nous allons parler de comment élaborer les projections financières de votre business plan. Donc, aujourd'hui, nous allons commencer par vous expliquer quelques éléments clés qui vous montrent l'intérêt d'avoir les projections financières. La première chose, c'est que vous devez toujours enregistrer tout ce qui entre et tout ce qui sort, même si c'est à crédit. Vous devez toujours enregistrer les endettements que vous prenez avec les dates limites ou bien les dates de délai. Vous devez toujours enregistrer l'état de vos stocks et bien comprendre comment est-ce que les stocks fonctionnent au point de savoir quand est-ce que ça baisse ou quand est-ce que c'est excessif. C'est à partir de ça qu'on s'approvisionne à nouveau. Vous devez aussi enregistrer tout l'argent que vous dépensez dans le business à travers les différents actionnaires ou l'argent que les actionnaires vous remettent. Tout ça doit toujours être enregistré. Vous devez avoir une comptabilité exemplaire. Il est aussi important de savoir si l'argent que vous gagnez atteint les objectifs financiers que vous avez fixés. Et pour cela, vous devez aussi enregistrer tout ce que vous recevez comme argent, la quantité d'argent que vous avez, on appelle souvent ça le solde en comptabilité, où et comment est-ce que vous allez dépenser de l'argent. Après, il faut aussi vérifier si vous faites le bénéfice. Et vous ne pouvez le savoir que si vous faites des enregistrements avec les calculs comptables afin de corriger votre façon de faire. Et pour finir, il est important de faire les enregistrements pour savoir si vous n'avez pas assez d'argent, auquel cas, vous pouvez aussi prêter l'argent à d'autres personnes, ou bien prendre des obligations quelque part, ou bien, bref, savoir si votre trésorerie est excédentaire ou si elle n'est pas suffisante, afin d'honorer vos engagements à court terme. Over to you.
Thank you, Foko. So I'll move on. And when we talk about financial statements for entrepreneurs or businesses in general, we're usually talking about three sets of statements. And these statements are known as the income statement, the cash flow statement, and the balance sheet. And to understand the statements, three statements at a glance, I have put this visual up, which kind of provides a summary of what each statement is about. So the income statement, which is also known as the profit or loss statement, is essentially a position at a point in time in the business, usually at the end of a given period, that shows the total revenue that came in, which would be, and the total expenses that were incurred, or the total amounts that you spent to running the business, and the revenue, the money that came in, the cash money that came in from buying and selling, from selling your product or services, minus the expenses you incurred, will usually give you your net profit or your net loss. So your net profit if the revenue is greater than the expenses, and net loss if it is the other way around, the expenses is greater than the revenue. The statement of cash flow is usually categorizes cash flow, which is inflows and outflows, in three broad categories: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. And all those three categories of cash flow summed up together would give the net cash flow. And then the final statement, assets, the balance sheet shows the position of the total assets in the business, total liability, and total equity. And it's always governed by a central equation. Assets is always equal to liability plus equity. I'm going to spend some time talking about each statement in detail, so we would still going to go in. The next set of slides will go further into each of the statements. We will start with the income statement. So the income statement, like I mentioned, is a summary of the revenues gained and then the expenses incurred over a specific period of time. And it's always providing information about the business ability or lack thereof to generate profits. So if you think about the structure of your revenue and your income statement, it usually looks like something like this. It will show your revenue and categorized by cash sales or credit sales. Cash sales are sales where your customer came in and they gave you cash in exchange for your goods and service. And then credit sales are when they promised, they collected the good and service, but the cash was not, they did not give the cash immediately, they promised to give the cash at time in the future. That's what is known as a credit sale. And then that is the revenue system part of the income statement. The expense part is made up of 4 different categories. There's cost of goods sold, which is your raw materials, what you use to, whatever input you use to produce your goods or your services. Your production-related salaries, what you are paying your factory people, people that are working in your factories or people that are involved in creating your good and service. Any factory overhead. So let's say you run a factory, your business involves you running a factory. Factory overheads are cost of electricity in the factory, cost of utilities, all the costs associated in maintaining that factory and keeping it running are your overheads. Also, cost of storage and cost of transporting raw materials to sites are categorized under cost of goods sold. These cost categories may not apply to every kind of business. Like if you notice, I was talking about factories. So if you're running the kind of business that is service-based and you don't have anything to do with factories, this particular cost buckets might not apply to your business. The next category of expenses is something known as selling general administrative. And then you have other salaries, you have administrative expenses, rent, payment for rent or office supplies. You have cost of transporting finished goods to customers, utilities, any cost you're spending in marketing and advertising, that will be categorized as selling general and administrative. Also under selling general administrative are your insurance costs, maintenance costs, travel, and line known as depreciation. And then the third category are your interest expenses. If you took out any loans from banks or other financing institutions, the amount you're spending on interest, paying back the loan is categorized under interest expense. And then the last category is your income tax expense. So before we, I would like Foco to go through this slide, and after which we would move very quickly on to the next set of slides.
Okay, thank you. Can you come back a bit, please? The previous slide. Donc, nous allons commencer par vous présenter 3 états très importants pour les projections financières. Le premier état, previous slide, please. Le premier état, c'est le compte de résultat. Le deuxième état, c'est le tableau de cash flow. Et le troisième, c'est le bilan. Dans le premier état financier, qui est le compte de résultat, vous devez savoir que le résultat est égal à tout ce qui est produit moins les dépenses. Et ce résultat peut être un résultat positif ou un résultat négatif. Donc, ça peut être un bénéfice si c'est positif ou une perte si c'est négatif. Le deuxième état, statement of cash flow, c'est un état qui vous donne la trésorerie de votre entreprise. Et cet état doit tenir compte, 1, de tout ce qui est solde de trésorerie des activités d'opération, c'est-à-dire l'exploitation, le fonctionnement de votre entreprise. Aussi, on a le solde de tous les mouvements en termes d'activités d'investissement, c'est-à-dire les achats des équipements, tout ce qui est durable. Le premier, c'est tout ce qui est à court terme, l'exploitation. Le deuxième, c'est tout ce qui est durable, investing activities. Le troisième, c'est le net cash flow from financial activities, c'est-à-dire tout le solde de trésorerie de tout ce qui est activité financière. Et à la base, donc, le dernier solde, c'est ce qu'on appelle effectivement le cash flow ou la trésorerie réelle de votre entreprise. Le troisième état, c'est le bilan. Et dans le bilan, vous avez d'un côté les assets qu'on appelle les actifs, de l'autre côté, liability qu'on appelle le passif. Et il faut toujours cette égalité de actif égale passif. Et le passif aussi, c'est liability, donc ce sont les engagements plus equity qui est votre capital, vos fonds propres. Donc l'actif doit toujours être égal. L'actif qui est ce que vous avez utilisé, qui sont vos biens, donc l'utilisation des fonds doit toujours correspondre aux fonds qui vous ont été remis. Et ces fonds sont de deux ordres. Soit c'est les endettements, soit c'est les fonds propres. Next, please. Donc, maintenant, nous allons commencer par détailler le compte de résultat, qu'on appelle encore le compte de perte et profit. Donc, c'est un compte qui vous permet, comme on a dit, d'opposer toutes vos charges, non, tous vos produits, les revenus avec vos dépenses, afin d'avoir le bénéfice net. Alors, faisons le tour de tout ce qui est charge. D'abord, les revenus. Comme revenus, vous avez les revenus cash, c'est-à-dire tout ce qu'on vous a payé en cash, les ventes en cash et les ventes à crédit. Et ces ventes-là, c'est la récompense des produits et des biens que vous avez donnés à vos clients. Ça, c'est pour ce qui est des revenus ou des produits. Maintenant, du côté des charges, vous avez d'abord les charges liées aux biens d'exploitation, comme par exemple les matières premières, tout ce qui est salaire, tout ce qui est factory overhead, c'est-à-dire que toutes les charges d'exploitation courantes, comme l'électricité, la maintenance, l'assurance, le coût du conseil et tout ça. Vous avez aussi les coûts de stockage et vous avez le coût de transport des matières premières pour arriver sur le site. Deuxième pôle des charges, les céline générales, c'est maintenant tout ce qui est charge liées à la vente, au marketing et à l'administration. À ce niveau-là, vous avez bien évidemment les salaires liés à l'activité, à la force de vente, c'est-à-dire tout ce qui est marketing de vente. Il vous faut donc payer les salaires. Les salaires liés à l'administration ou les dépenses liées à l'administration, comme la location des bureaux et tout ce qui est location. Vous avez aussi le coût de transport des produits finis pour que ça puisse arriver sur le client. Vous avez maintenant tous les utilitaires, comme l'électricité, l'eau, le gaz, Internet. Vous avez aussi les coûts de marketing et de publicité, les coûts d'assurance, la maintenance, le coût de transport et les amortissements. Les amortissements qui sont des charges non décaissables, mais vous devez toujours les calculer. Et pour finir, comme dernier pôle des charges, ce sont les intérêts liés au crédit que vous prenez. Donc, ça, c'est indiqué. Et pour finir, on a aussi les intérêts, non, les taxes, tout ce que vous dépensez pour payer les taxes. Okay, over to you. Thank you.
All right. So before we move on from the income statement, I wanted to share this visual that just summarizes in a visual form what the income statement will look like, how it is composed. So it starts with the revenues, then we deduct the cost of goods sold, deduct the sales and general administrative expenses, deduct the interest expenses, income taxes, and what you're left with is the net income or net profit if it's in positive. So moving on very quickly to the next statement. That's the cash flow statement. So the cash flow statement, this one records the amount of cash and cash equivalents entering and leaving a company. And just to summarize this view, operating expenses look like cash collection from customers, investing activities, proceeds from sale of property or gains, and financing activities are money that comes from borrowing, either borrowing loan or collecting money from friends or family or other sources of equity. And then the outflow of cash is operating outflow comprises of payments to suppliers, payment to employees, payment of income taxes. Investing outflows comprises of purchase of property, plant and equipment, and purchase of long-term investment. Financing outflows can be payment of dividends, repaying borrowings, purchase of shares, and payment of interest. So those are the activities that result in financing outflow in your company. So because of time, we are going to move on to the next statement, and that is the balance sheet. So one easy way, because the balance sheet, the visual I'm going to show has a lot of things. But one way to summarize your understanding of balance sheet is essentially your assets, where the money is going to, and liabilities, where money is coming from. Liabilities and shareholder equity. So, and this is the summary of what it looks like. So it's essentially under assets, you have your current and non-current assets, and liabilities. You also have your current and non-current liabilities, and then you have your shareholder equity. At this point in time, I'm going to have to move over very quickly to the financial template. But before I move to that, I wanted to share this slide that just summarizes what you need to think about. So we've spoken about the three statements, but the good part is that in the template that you've been provided, it's good that you understand the three templates and what that template does, the three statements. What that template does for you is that it takes the assumptions from your business and it auto-generates your financial statement for you. So you don't have to create your balance sheet, your cash flow, or your income statement. In that template that you've been provided, it generates it automatically based on the inputs that you provide about the cost that you're using to set up and run your business, the revenue that you're earning, and how your business will be financed. So you just need to think about this, think about the answers to these particular 4 questions, and you would then go into the templates, provide them in the assumptions tab, and those 3 financial statements, your income statement, cash flow statement, and balance sheet will be automatically generated. So I'll hand over to Foko. Foko, please, can you translate just this slide because of time? Thank you.
OK, thank you. Donc, on va sauter l'autre partie. Sur cette partie, on essaie d'expliquer qu'à travers les 3 tableaux qu'on vous a indiqués tout à l'heure, il est important pour vous de savoir que vous avez 4 informations importantes. Et vous devez savoir que le canevas de tableau financier qu'on vous a donné, vous allez juste mettre vos hypothèses, c'est-à-dire vos chiffres clés. Et les tableaux là vont générer automatiquement tous les résultats qu'on est en train de vous expliquer. Donc, la première information qu'il est important pour vous de savoir, c'est l'estimation de vos coûts, de vos besoins, de ce dont vous avez besoin pour créer et gérer votre entreprise. C'est en quelque sorte tous les coûts d'exploitation. La deuxième chose que vous devez savoir, c'est l'estimation du revenu que vous comptez gagner. Comment est-ce que vous allez obtenir des profits? Ça, vous devez le calculer, l'estimer, en faisant bien évidemment le prix unitaire fois la quantité de produits à vendre. La troisième chose, c'est confirmer ces revenus et les opposer à tous les coûts et l'impact lié au fonctionnement de tous vos plans. Pour ça, il y a plusieurs stratégies qu'il faut mettre au devant dans son plan, comme par exemple, voir tout ce qui est produit, tout ce qui est prix, tout ce qui est marketing, tout ce qui est organisation et tout ce qui est organisationnel et tout ce qui est distribution. La dernière chose dont on a besoin, c'est déterminer comment est-ce que votre entreprise doit être financée. Ça peut être par les dettes, ça peut être par la capitalisation, c'est-à-dire les ventes d'actions aux actionnaires. OK, thank you. Back to you.
Thank you very much, Foko. At this point, I'm going to stop sharing this particular presentation and I'm going to start sharing the Excel templates that you will be populating. So, okay. Please, can you confirm that you are currently viewing my...
Yes, Omomi, we can see. Thank you.
All right. So when you open your Excel financial templates, the first page you're going to see is this view, this one I'm looking at here. And what you need to do here is simply to enter the details, fill this three fields, your name, company name, and email address. That's all you need to do. Once you do that, you can just go ahead and click this assumptions tab button and you would bring you to this page. So the good part of this template you've been provided is that even though the template has 6 different sheets, you only need to focus on filling the instruction, which is just these 3 fields, and this assumptions templates. Once you fill the assumptions templates, all the other fields will be populated. So the assumptions template is, if we start from the beginning, you see that it says, provide the requested information for your business in each of the 10 assumption sections below. and terms with an asterisk are defined in the glossary section. So if there's any section you don't understand, any term you do not understand, you can come to this glossary section, which has some definitions here, just to explain any terms that are you're finding it hard to understand. So there are 10 sections in the assumption section. The first section is the general section. So section A, general over here. And when you are in this section, what you need to do is fill your business country. There's a drop down here, and then you can scroll through to look for your business country, and you just need to put in your business country there. So I would, for instance, put in Nigeria here. And when you do that, you don't need to come and fill this. It brings in the local currency for this business country is automatically populated with the local currency of the country you select. So for instance, if I had not selected Nigeria, but had selected Ghana, it would change the field to CD. So all you need to do is just fill your business country here, and it will bring up the field of your local currency. And why this is important is that it uses the selection here to identify the currency that would apply across the different balance sheets, across the different sheets in this document. So you can see that it's showing the CD sign. If I had selected Nigeria, it will show the Naira sign. So that's the first thing you do here. The next thing you're going to do, and this section is very important, is to fill your business products and services. So in this section, this section might be straightforward for businesses that have just one product. For business that have multiple products, you still need to go on ahead. That's why you have product service 1, service 2, service 3. For instance, I'll give the example of maybe a sustainability focused business that is focused on recycling plastic. So as I'm going through this financial template, I'm just going to use the example of, I'm just creating a business example so that we can use and to make this template relatable. So let's say we have a small business that is focused on recycling plastic. The business model is to collect waste plastic from individuals and from companies. Individuals and organizations collect all the waste plastics, put them in a factory, and recycle them into other products that can be bought and sold. So the product for a business like that is essentially the recycled output, which is whatever the plastic recycled element is. And that is the product that will be listed here. Maybe recycled bags, recycled packages, recycled paper, or whatever it is. That is what will be listed here. And let me just do, as an example, just type in that recycled plastic. In that same business, another product or service for a business like that can be a plastic collection service. So since the business model is to collect plastic from different parts from either individuals or companies and recycle them, that business can also be offering a paid service and can go to corporate organizations and say, look, I see you are generating a lot of plastic. Pay me a small amount every month, and let me come and gather all your plastic for you, so that you don't have to be concerned with how you dispose these plastics. So and that would be a paid service, and that's another source of revenue for the business. So we can list that service as a business under the business product or service, and that service we can title it waste collection or plastic waste collection. So let's say, this example of the business I have shared has two sources of revenue, a product and a service. The product is recycled plastic, and on the other hand, they are also offering collection of plastic waste from corporates. So you fill in your business product and service as many as the field. This tool allows you to fill up to 3 different products or services. So you can fill both products and services. Then you put in your company tax rate, like it might be 30% in your country, whatever it is in your country. You put in the bank interest rate. The bank interest rate is usually not relevant if you are not going to take a bank loan, but you can still put it in anyway, because it will be used to populate your repayment schedule for your loan repayments. But if you know you're not going to take out any loans, you can leave it blank. But let's assume that this business is going to take out loans, so I'm just going to put an hypothetical interest rate of 15%. You're also going to, the template also asks you for inflation. And why it's asking for inflation is because a good number of, in every economy you are in, every country you're in, your cost on a year-on-year basis is going to be affected by the cost of inflation, the inflation rates in your country. So if the inflation rate in your country, for instance, is 10%, and that means that, let's give the example of that business. Let's say that business has to buy waste bags to package all the plastics that they are collecting. If they buy the waste bags at, let's say, let me use the example of Nigeria, at 500 today, this year, if Nigeria is experiencing an inflation rate of 10%, that means when they are going to buy those bags next year, it might cost 550 naira. So that's why it's important. And inflation rate affects the cost of a good number of products or services and in your country. So it's always important to factor it as you are projecting your costs for all the years for at least the years that you want to project in this template, which is up to 10 years of running your business. So let me use an example inflation rate of 10%, and I'll put that there. So before I go very quickly in this template, I wanted to point out this section at the top over here where my mouse is, and it shows two sections, a light gray and dark gray. So anywhere that is light gray, you can fill. Anywhere that is dark gray, so examples of the set fields that are light gray are these fields. But any field that is dark gray, you don't have to fill it. So this is an example of a dark gray field. You don't have to fill it. The field is automatically populated. So take note of that as you're filling this template. You can write into the cells that are light gray, but do not write into the cells that are dark gray. So I have provided company tax, bank interest, and inflation rates. And these rates are very specific to country. That's why they're always left blank in the templates. So you have to fill as it is relevant for your country. So this general the figures here are figures that are general to whatever country you're in. So all the entrepreneurs from one country will typically have the same fields for this area. So these figures are general. Then the next section is depreciation rates. And then these figures are standard figures. Sometimes they vary, but you can see that it's already been populated here. What has been populated here, you can leave it the way it is for now. Then that's the first section of the assumptions tab. The next section is your growth rates. And here's the instruction. Enter the expected yearly growth rates for your business below. You can use the growth rates to demonstrate projected expansion plans for your business. So when you come to this section, you can see under revenue, it has already put in the name of the name you filled in here, recycled plastic as your product 1, plastic waste collection as your product 2, and the third one is blank, and you don't need to fill anything here. So what you're going to do on sales volume is, what is your anticipated growth in volume? What that means is that if in year 1, I will give the example of that business, that first business, based on the staff strength, and let's say it's just one person running the business, and the person knows that they're only able to gather maybe just 500 kilograms of plastic every month. But by the time by this time next year, they would have hired 2 more people who are able to also gather the same amount. They have bought a truck that can make them now gather up to 4 tons of plastic every month. So that sense of projected growth, which will differ for businesses. Your own idea of growth will be different from another business's idea of growth. But essentially, those projections are what this section growth rate is asking for. So what estimates of, and then I gave the example of collection, and the collection, if you gather 500 kilograms of plastic, maybe you are able to generate 10 let's just say plastic bags. So if you gather 5,000 kilograms or 5 tons, you can generate 100 plastic bags. So in that example, you are able to generate 500, make 10 plastic bags this year, but next year when you hire 2 more people, you should be able to generate 30, make 30 plastic bags. So in that example, the growth rate from year 1 to year 2, it would you estimate it here. For that example, growing from 10 bags to 30 bag, that is a growth rate of 300%, if I'm correct. So that is what will be projected here. However, that growth rate is not usually true to life. It's not, so even if you grow by 300% the first year, by the second year, the expectation is not as if 300% is not scalable, is not the rate at which your business will grow year on year. You will probably grow this fast within the first 2 to 3 years. After a while, it now stabilizes and your growth rate now starts to look like something like 10%, 15%, 20%. But I'm just using this as an example, and then let me just make the number a bit more true to life. And I'm just going to put in a few more growth rates just for the first 4 years. So that's for sales volume. You're projecting that you make 10 bags in year 1, then you make 30 bags in year 2, maybe 50 bags in year 3, and on and on and on. Price growth rate is now your projected growth rate on your how much you're going to sell the bags. Let's say, for instance, in year 1, you're selling the bags at 500 naira, and you believe you can even still keep on selling them for 500 naira for at least your first 2 years. But on your third year, you will have to increase your price to maybe 750 naira. So that impact in growth rates, that's a change in growth. So for the first 2 years, you're not changing your price, so you keep it at 0%, 0%. And by the time you're moving from 500 to 700, that's reflective of a growth rate of 150%. I'm hoping my math is correct over there. And let's just keep it, then you keep your prices stable for year 4. So I'm just building what that looks like. Likewise, so we've done the growth rates for volume and price for the first product. We're also going to do the same thing for the second product, which is waste collection. And let's just assume, I won't talk through examples, I'm just going to assume growth rates, but everybody's growth rate will be very specific to the growth ambition of your product, your business. Some businesses can estimate a dramatic growth like 300%. Some other businesses, you know that your growth rate is not that dramatic, that based on your available resources, that is the number of people you have available, the amount of equipment you have, you can only grow by 5%, 5% every year. That's okay. So everybody's growth rate will be different and will be specific to the business that you're running and the ambition or the goal you have for growth in your business. So I'm just going to fill in some dummy numbers so that we can progress from this section. So the next thing we're going to do, the next set of growth rates you will be expected to estimate to be able to generate your financial projections are your cost growth rates. So your direct costs, how much do you estimate them to grow year on year? So cost growth rates is usually not very dramatic. If you expect, it could be dramatic again based on your growth ambition. So let's say, for instance, in your business, you are running your business in your community and you plan to run your business in your community for the next 5 years. Your community is not a very big community. Maybe population growth is just like 2% overall. So you know that your main costs are not going to change significantly. You can just project a very modest growth rate of 2% if you know things are not going to grow that dramatically across board. You can just project something very modest. But if you know that your own business, you have very ambitious targets where you know that this year you're starting in your community, or by year 2, you're expecting to have grown to 5 other communities. By year 3, you're expecting to have grown to 50 other communities. Your costs will be dramatic. Your costs are going to grow. So what that means is that if you are moving from operating in just one community to moving to operating in 50 communities, one community in this year to 50 communities in the next year, your marketing costs will definitely grow very much. They can grow by 50%, sometimes can grow by 75%. It will be very dramatic. But if you know your own growth is not as dramatic or as transformational, you can keep it to a very modest rate of either 2% or 5%. But it's always realistic to project growth in costs, because the reality of our economy is that costs increase year on year in a lot of the goods and services that we need to run our businesses in our different countries and economies. So I'm just going to put in 2% so I can move from this section. At this point, I will pause and I will ask Foko to please help with translating. You can just speak through the different assumption categories and the sections, not so much on the numbers I have populated. Thank you.
Thank you very much. I'm going to be very brief. OK. Donc, ce qu'on va faire, je vais juste vous donner un aperçu du fichier des analyses financières qu'on vous a transmis. Donc, quand vous ouvrez le fichier, le canevas qu'on vous a remis, vous avez juste à indiquer le nom du projet, votre nom et votre email. Et dans le prochain onglet, qui est l'onglet des hypothèses, c'est qu'elle a appelé Assumption, l'onglet des hypothèses, c'est en réalité le seul onglet où vous devez mettre vos données. Vous devez mettre vos données. La première donnée, c'est la monnaie en fonction de votre pays. Vous choisissez juste le pays et la monnaie sort automatiquement. Maintenant, toutes les autres sections qu'elle essaie d'expliquer depuis, vous devez juste les lire et en passant, vous avez un onglet à la fin où on vous a donné une définition de tous les thèmes. Et quand vous revenez dans l'onglet hypothèse ou assumption, vous allez donc aller section par section en essayant de remplir uniquement les zones grisées. Les zones grisées sont les zones à remplir. Et je rappelle que le fichier, le document est protégé. Il n'y a que là où vous pouvez écrire qui est ouvert. Si vous tapez ailleurs, c'est impossible d'écrire. Donc, dans cet onglet des hypothèses, remplissez les éléments section par section en fonction des paramètres de votre projet. Comme par exemple les produits, on vous donne la possibilité d'indiquer 3 produits. Alors, vous devez indiquer les 3 produits de votre entreprise, indiquer là où c'est nécessaire les prix, indiquer le taux d'inflation, indiquer les différents taux d'intérêt si vous allez prendre les crédits. Ça va dépendre si vous prenez les crédits ou pas. Si vous prenez plusieurs crédits, on vous a laissé l'espace pour mettre les différents taux d'intérêt des crédits que vous estimez. Ce sont les projections. Donc, ce que vous écrivez là-bas dépend de vous. En réalité, vous faites des études pour pouvoir déterminer quels sont les paramètres propres à votre projet. Donc, ainsi, section par section, vous devez remplir les hypothèses qui correspondent à vos ambitions. Et dans les autres tableaux, tout sera automatique. C'est-à-dire le tableau des résultats, le tableau des cash flow et même le tableau du bilan. Donc, tout va sortir automatiquement. OK, donc je vais laisser que Omoyomi continue avec les explications. Thank you. Over to you. It's good.
Thank you very much, Coco. So I have gone through the assumption and growth rates, the first 2 sections, and then moving over to the third section, startup costs. So in this section, it says, enter the cost you expect to incur in the process of setting up your business below. Note that not all costs may be relevant to your business, so only few where necessary. So this is one thing I want us to always remember as we're filling these templates. If you see a cost and the cost is not familiar, it's not a cost you incur in your business, you can always leave it blank. Don't feel pressure to fill every single section, especially the ones that you know your business, the cost that you know that your business does not need to incur or normally incur. So here you feel it allows you to put in the cost for land. If you're going to purchase land, for instance, let me just put a rate of 3 million naira. Building or civil works, let's say to start up your business, you need to buy land and you need to build on the land, build your factory and things like that. This is what this section is asking you for: cost of your land, cost of your how much you're going to spend on civil works. I'm just pulling in dummy numbers. furniture and kitchen, when you need to buy doors, windows, and different things to equip different things to make up the building itself. So doors, windows, handles, sockets, electricals, those are furniture and fittings. Equipment and machinery are now in the same instance where the machines that you're going to bring in to put in the factory. And let me just put in an estimated cost there. Vehicles are, for instance, if you have to buy your own vehicles to run your business, again, all these costs are put in there, but they are not compulsory for every business. So if you know your business will not need, let's say you're running services, maybe your business is just about collection of waste and collecting waste and taking it to recycling fab plants. You are just in the business of collection and transport. You don't need land, you don't need factory. If you don't know your business is that way, you don't need to fill the startup cost section. You don't need to fill this land, building, furniture, equipment, and vehicles and installations. That means if you know you don't need those, you will not need this setup to run your business, then you don't need to fill it. So that's the first section. Then the second section is automatically computes the additional startup cost by selecting from the drop-down menus to the right. So additional startup costs, what this template is recognizing is that for some businesses, to start up your business, you need your land, your building, your equipment, and vehicles. For some other businesses, you need your opening inventory. That is, you need the stock on ground. Let's say you're in the business of selling solar panels or solar stoves or renewable stoves that run on renewable energy. Your starting stock, that is the stock of maybe 50 or 20 stoves that you have in your store ready to start your business and to start selling. That is what is known as your opening inventory. So you can estimate what it would be here, whether it's 4 months of your direct costs, 1 month, 2 months, the case may be. Your initial working capital, that is the amount you're going to need at the beginning of your business to be able to pay your employees, maybe your first set of employees that you're hiring, or to be able to pay your vendors. Maybe your vendors are not going to do anything, they're not going to supply anything until you pay them. That is also considered part of your startup cost, your initial working capital, and then you can estimate it here. Notice that nothing is coming up yet because we've not started populating the direct cost, and we'll populate the direct cost in another section. But you can just indicate how much coverage you need. So this 2 month worth, 3 month watch is how much coverage. So 2 month worth is saying that I need to have enough stock for 3 months or for 2 months to be able to get started so that I can move as quickly as possible. Or for some businesses, you know that if you have just 1 month stock, you'll be able to, by the time you sell it, all the money that will come in, the revenue that will come in will be enough to keep you going. Then you say you just need 1 month stock. But if you know you need up to 2 months, 3 months, just based on how frequent or how much margin you make on your business, you select the level that is relevant to your own business needs, and then contingency as well. So that is the third section of the view. The fourth section is headcount analysis. And here you will just be asked to put in the total number of employees you have and total amount of salary you intend to pay them. And the employee categories are broken down by section. So total number of your senior management employees, your CEO, CFO, your total number of business development or sales employees. Business development, those are the people that are going out to look for business for you. Employees you have hired to go and look for business and clients for you. Total number of your sales or customer support personnel, total number of marketing personnel, total number of IT or tech support personnel, total number of back office, that is legal, finance, HR, supply chain, and administration personnel, and total number of operations, front desk, fleet management, facility personnel. Some businesses need to hire all these categories of employees. Some need to hire maybe just 2 out of all the different categories listed. So you're only going to populate the categories that apply for your business. And then you are also allowed to, the template also allows you to select what number of managers and what number of associates, or what number of supervisor employees and what number of regular team employees. And then you can also put in what the base annual salary will be like. So the template also allows you to, let me stay here where I am, to project the number of employees you're going to need year on year. So for instance, if you know your ambition is to grow by 300% every year as a business, and then you know that you're going to need, again, let's stick with that business that we started with, the plastic recycling business, to be able to grow by 300% every year. And you know that by yourself, you can only collect 500 kilograms of plastic waste every month. That means you're going to need to increase the number of people on your team so that you can gather more plastic waste every month. And that what that looks like every year, sorry, what that looks like is that you're probably going to increase your number of staff from 2 in the first year to maybe 5 in the next year to maybe 7, and on and on and on. Likewise, and then some, if the years that you know that, okay, I'm not going to need to increase the number of staff, you just keep the number stable. So for instance, you can just keep the number stable at 1, 1, 1, 1 as you keep going. So this template allows you to imputes the total number of employees you need and the base salary that you pay them. So let's say, for instance, for this role, base salary is 2 million. And for this other role, base salary is 1.2 million. And then based on the growth rates that you entered for how your salaries will grow year on year, which is 2% every year, this template is populating the growth rate. So someone starting with a base salary of 2 million by year one, the salary will grow by 2% to 2,040,000 by year two, 2,080,800, and on and on and on. So essentially, this template, you just need to fill in the base year, fill in the total number you're starting with, and the number of employees year on year, and it would grow as it's the template will populate for the rest for you. The fifth section is operating cost, and this is the place that you now start to enter your direct costs. How much are you going to spend on raw material? How much are you going to spend on direct labor? Let's say you need people that are going to go and manually collect plastic waste on the streets for you. Those, if you don't incur that direct labor cost, you can't run your business. That's your direct labor. And let's say you're spending this amount of overheads, you're spending this amount of inbound. I'm just putting in these numbers to move very quickly, but these numbers are not true to life, but I'm putting in these numbers so that this template can generate a visual for you to look at. Also, on rent, you put in what your baseline, and this section is asking you for your baseline cost. Again, this section, not all fields might not apply. So if you're not a factory-based business, you don't need direct labor and all of that. You don't need to fill these sections. So and then you move on to your fixed costs, and then he has populated the salaries and wages based on the information you provided here. You don't need to fill in salary and wages here. It's filling it from the earlier section. You just need to provide the other categories of costs. So I'm just running some numbers in there, and I will skip some sections because not all sections are mandatory. The next section is revenue, and is here you're going to then start to project your revenue. So on recycled plastic, what's your base monthly sales volume? We said it was 10. What's your base product service side price? It was 500. That's for this category of products. From this one, for plastic waste collection from corporates, let's say the base sales volume. Base sales volume is maybe the number of corporates they are selecting from. So you're collecting from 5 corporates and you are charging them 100, maybe 1,000 naira per month for collection. This is a monthly service price, monthly price. The other section this will ask for is seasonality. And this template recognizes that your business, even if you say you sell 10 bags every month, based on some patterns that are time-based, which are known as seasonality, you might sell more than 10 and you may sell less than 10. So if you have season-based businesses, for instance, Anybody that is in the business of selling things for the rainy season, let's say you're selling umbrellas, in the rainy season, your sales would spike and it will be more than normal. And in the dry season, you might not even encounter any sales. So this section is where you account for seasonality. And you say, I know that my business will be able to sell 10 bags in January, 10 in February. Then maybe in March, maybe in your country, in March, you have like a holiday that requires a lot of people to buy bags. Then you can say, okay, in March, I think I should be able to do 300%. And then you account for seasonality. That means you sell 30 bags in March. April, it's the same, May is the same, June is the same, July, you just notice that generally in July, sales drop in your country. You can then put it to 50% and you think you will only be able to sell 5 bags in July and on to the rest of the year. So I'll move very quickly. Same logic applies for your service-based business, but I won't plot the seasonality for that, but that is the same logic. So you account for seasonality for every type of any kind of business that you know seasons affect. But if you know seasonality does not affect your business, you can just leave it 100% for all the months in the year as it is right now. The seventh section is your working capital. And in this section, it asks you to estimate receivable days, payable days, and inventory days. So this is important because your receivable days is your average number of days that customers take to pay you for your business for service rendered. Payable days is average number of days that you take to pay your suppliers, and inventory days are days required for your business to sell one batch of inventory. This information is important for cash cycle management. So we're just going to put in examples of, let's say your business, on average, your customers pay you back in 3 days. I'll put 3. On average, in your business, your suppliers are lenient with you. They allow you to take stock, but you have to pay back the stock in 1 week, within 7 days. Maybe some will tell you you have to pay it in 3 days. Some will tell you you can pay it in 15 days. So let's just say on average, 7 days. And then inventory days is how long do you take to sell one batch of inventory? And let's just plot that as 12 days. The next section is startup financing. So this section is asking you to start your business. Where is the money going to come from? Is it coming from your personal savings? Is it coming from grants? Is it coming from equity? So grants are monies given as gift or donations with no condition of payback or partnership of business. They can come from friends, family, or other sources. Equity is money given to your business by venture capitalists or other sources in exchange for part ownership or shares in the business. So the general difference between grant and equity is a grant is given with no conditions, no strings attached. And equity, when it is given with the condition that you are going to give the person 5% of your business, 10% of your business, or the case may be. And debt is loan, is money from bank or other lending institution that must be paid back. So let's say, and then here you're not estimating numbers, you're just estimating proportion. So to start your business is, let's say it's 50% here, 20, 50, 12, and then 18. And this section must always add up to 100. So you notice it was green before, and now it was red before, now it's green. So essentially, I'm summarizing, wrapping up, and I'm just going to assume that this business, your example does not have debt financing, so I'm not going to debt financing. So with all what we have populated here, what you would see is that by the time you go to your income statement, you see your income statement are automatically generated, which reflects your revenue from your different lines, year on year, your cost from your different lines, your interest expense. And when you link it back, you will see that this is related to what you filled in the assumption statement. Likewise, for your balance sheet, it has already been populated for you. And your cash flow, this has already been populated for you. So thank you very much. I have to wrapping it up now. Thank you. Thank you. Foco, please, if you can do a quick translation just to wrap up. Hi, Foco, are you still there?
Yes, I'm around. OK, donc je pense qu'elle vient d'expliquer tout un ensemble de choses que pour vous, puisqu'on ne peut pas tout traduire, vous devez seulement regarder les définitions de chaque thème et renseigner les informations en fonction de votre projet. Elle est allée section en section en faisant remplir la section des coûts, la section des investissements, la section des financements, bref, toutes les sections. En partant prendre les définitions en français, vous allez rapidement comprendre de quoi il s'agit et mettre vos informations. Elle était juste en train de prendre des exemples. Donc, ce n'est pas nécessaire de revenir sur tout ça. Donc, on vous remercie pour cette journée et bonne continuation. OK, over to you.
Thank you very much. And with that, I come to the end of today's training, and I'm going to hand it back to the TEF team. Chimezi, thank you. Okay, while we're waiting for Chimezi, let me just take one of the questions I see on the live chat. I noticed the question that said that the person opened their financial templates and they could not see this section here, business country, a place to select their business country or their business currency. So when that happens, it's usually maybe because you are opening your Excel document in protected mode. You have to enable editing because these are form controls and they will not show up until your Excel document is enabled for editing. So if you notice that happening to you, just close the document, open it again, and remove it from protected mode or select enable editing in your Excel version that you are using. All right, Chimezie, are you there now? I notice you're not on mute.
Can you hear me?
Now I can hear you. Thank you.
Everyone, thank you again for joining this session. I think you won't have time to take any questions because we are out of time. But in the attendance link, if you click on it, there is a section to add your questions, and you'll be able to add any questions you might have, and we will address it when we pick the session up in our next masterclass on financial planning. Thank you again, everyone. Thank you, Omomi, for hosting this session. And thank you, our entrepreneurs, for joining this very insightful class. Thank you. Foko. Right.
Donc, au revoir et à la prochaine session. Bye.